Aloha, everyone. Welcome to Java. Thank you so much for joining me. This is Thursday. It's November 9th, 2023. And I want to send a special shout out to all of you that are here for me every single day. I really appreciate that. And if you're new here and you like the channel, hopefully you'll hit that like so that more people can see this. And if there's something you would like to see in particular or any aspect of this, please leave it in the comments. I do read them. So with that, let's go on. There's quite a bit going on today. We'll start with our favored risk indicator is the MMRI, showing that we have retraced out of that extreme territory, which is above that 300 level, at least for the moment. So still high risk area, but we've watched the two main elements of that. We use the relative dollar strength coupled with the 10-year yield, US 10-year yield. So that being far below that 5% that the market hates, it kind of retraced a bit. So as I said, there's still plenty of risk. Right now, we're showing kind of a mixed market, and the futures are kind of telling a bit of a mixed story as well. So the sentiment at the moment for this is neutral. And I expect a short correction for today kind of is due for the equities because we are at those higher levels where we're hitting resistance. Chart wise, it shows that we are due for a bit of a pullback, at least temporarily. So, with the calendar, we're not having an awful lot. We are expecting jobless claims prior to market this morning, and we're going to hear from Jerome Powell at 2 p.m. So, today he's on a panel at the IMF, International Monetary Fund. And then we'll hear from President Harker later this evening. So we could have some action at that 2 o'clock in the afternoon time frame. We'll see if he says anything. We've got tomorrow Dallas Fed President Logan and Bostic, and then getting the formal consumer sentiment at 10 o'clock. We are still getting a few company earnings, and those could have an effect on specific stocks. So I want to go into this. We're still in a high risk area. Anything can happen, basically, headline driven. But for the moment, it's kind of stabilized out. And we'll talk more about what could affect the factors here. So with the banks, BlackRock execs saying that there's still $4 trillion of cash, quote unquote, sloshing around the sidelines. So a lot of these are in company corporate, but basically the goal is to kind of squish that cash out so that demand is crushed and that would bring inflation down. That's the idea. So, but consumers are kind of spent out. So we've had a tide change here and we're watching treasuries. So the sale yesterday and bond sales, as I said, are now becoming a bigger deal or more of a mover for stocks as investors are looking towards that. Jobs data is more tied to the Fed, what they were looking at for hiking. But since they've paused for 2 cycles, they're kind of seeing the Fed as less of an event now. So falling treasury yields now could still spur the Fed to do another Fed hike because they don't want to watch things going back out of control as far as inflation. So they are still watching them there. But for now, another story as far as the Fed that could have an effect. Now, this is the Cleveland Fed president is Mester, and she's being forced to retire. Timing wise, I think is more important next June. So this is right when most of the major, basically market watchers are saying that we're going to go into a recession. So I think it's interesting that she is very hawkish, meaning tight monetary policy. And when she retires this coming June, is right when they're expecting a bit of dovishness to be necessary. So who they replace her with could kind of create that excuse for them, so to speak, to go easier on their monetary policy. And we've also got this into oil, sending a warning that the Fed is toast. So basically, what they're getting at is that they need easier monetary policy as well. So it's not an if, kind of a when. I do expect oil in the longer run is going to be going higher as we're going to hit first, I think, this deflationary phase. That's kind of the camp I'm in. And then the inflation will kick in very harshly, very suddenly. Okay, with that, we'll be looking at our short-term indicators that I look for the real economy. Is we've got a German container shipping company talking about how their profits are plunging over 50%. And they're attributing this to a severe shift in the market because shipping has come down. Now, I want to note that this is from Germany, and that's part of the difficulties they've been having with their economy between the cost of oil and production for their manufacturing, because they do need energy in order to produce. So we're watching that come back in. We've got this other story with auction signature bank loans are expected to lose as much as 40% of their value. So this is a combination that is coming in for not just the banking sector crushing, but the real estate behind it, because all of the assets that those loans are backed by are now facing headwinds, and that's part of it all crumbling at the same time. So if they have to sell these loans, all of the assets behind them will be sold for pennies on the dollar, which is generally now commercial real estate as well as other assets. So backstory on this is when the pandemic hit, many companies, if they could, went online. Banking was a large part of this. So instead of the physical branch banks, we've got three hitting with stories, similar stories, within days of each other. So the first one is SoftBank, and they're tied to WeWork. So WeWork had their loans through them, and they just claimed bankruptcy, meaning SoftBank, which is actually Japanese backed, is going to take the hit. Second one coming in here is PayPal. So their CEO is talking about how their company focus has not been very clear. They were focusing on creating stablecoin to kind of go through a cryptocurrency space and start trading there. And they've also been investing in artificial intelligence. They did receive their crypto asset license for the UK. And I actually think that's the correct direction to hit, because they need to diversify and go into this space. It's going to be up and coming. However, they had to cut their costs, so their direction in doing that, they cut jobs. So, moving on to the third company is Upstart now, and they're talking about how everything's going wrong. They're getting hit as well. Same thing, they used artificial intelligence models, they started building into those. And with the rate increases, they're really suffering unrealized losses. They're beginning to realize those losses. So they have to cut their costs. They laid off more than 500 employees. So it's all kind of funneling down now. So moving farther into this kind of ties into the unemployment. Nextdoor laid off 25% of their staff. As we're hearing from them, we've also had Amazon that is laying off, and there's several other companies as well. So this is just the beginning of hitting that unemployment phase, which is true earmarker for a deflationary phase or actually depression, depending on the level that we hit. So we spoke about this prior to all of this starting, and we're starting to move along this track. Okay, so coming along with this, we've got the Eurozone as risking a recession. And this is basically just a coalition of the S&P global data that they're going through. So basically, IMF, Eurozone, they're in a deflationary phase. China now in a deflationary phase because they're talking about their property corrections between the fall of Evergrande and also Country Gardens. And this is kind of funneling down. The analysis for this is it's causing a liquidity gridlock for the United States commercial real estate sector. So started with the office space, and it has kind of spread now, not just office space, but now multifamily and retail space, because everybody's kind of pulling back. So we've got U.S. Secretary Janet Yellen, Treasury Secretary. She's going to meet with the Chinese Vice Premier this week, and we've also got Biden meeting with them. We've got trade deals that are kind of going sour, and they sanctioned China, trying to punish them over the chips. Well, that's hurt our own local company because NVIDIA couldn't sell their chips, so now Huawei, which is the Chinese chips, came out with smaller chips that they started using. So NVIDIA created their new chips and they're trying to compete now. So, got to give you a couple of other things. In the cryptocurrency space, this could be huge. We've got the SEC, they're just starting their first window. They've got the next 8 days basically to approve all 12 spot Bitcoin ETFs to begin today. So keep this in focus. I also spoke about this the other day. This is not financial advice, but one of the taglines that were in here was that they would have to choose basically an exchange, and one of the few that are basically approved are Coinbase. So we'll keep an eye on that. So I want to move forward before this gets too long because this is quite a bit. We've got the lava updates. So inside the IMF, International Monetary Fund, did give a large loan to Argentina. And that's kind of going south because the oil price is coming back. Argentina, that's their main, basically, commodity that they are for that comprises their GDP. So now they're running into financial troubles. IMF doesn't like this. Loan came with strings attached. And so they're kind of putting pressure now since Argentina was talking about going into the BRICS nations. So we'll keep an eye on that because the trade could really be affected with that. And we've got a story come out of Bloomberg now. We just spoke about this the other day. And it's talking about controlling the weather. Can we control the weather? Well, we know they can. We've got units over the Middle East at the moment with military applications going to kind of have our effect with the war there, give us an upper edge. And now they're coming out asking if Japanese scientists thinking that they can so that they can manage rainfall. So I think that's kind of funny that they're coming out with this afterwards. They finally start in smaller stories admitting what we already know. So with that, I wish you all a green trading day, just a wonderful day in general. And until I see you again, my friends, stay free.